Today we're watching a video by Shelby Church, stock versus real estate, which made me more money. Okay, let's see.
Real estate has long been regarded as the best investment you can make. It's how you build wealth here in America, right? Well, some people are now saying it's maybe not the best. The stock market is a true passive investment with historically pretty solid returns. Well, I've been invested in both now for about 5 years, and today we're gonna look at which is doing better so far.
Yeah, that's actually a great recommendation to be invested in both. Probably one can be greater as the other 1 year, and probably in 1 year it is real estate, the other year could be stocks. But if you are diversified in your portfolio, a bit of money in stock and a bit of money in real estate, it's always better to have both investment side by side.
Because I always fell into the camp that real estate really was the best investment, but I've been seeing a lot about how maybe that's not the case. So why is everyone so obsessed with real estate? Because the returns over 30 years are good. Walk around any neighborhood and look at houses for sale, and you'll notice that the prices they were 30 years ago is shockingly low.
So this house behind me was purchased for $300,000 in 1988 and is now for sale again for $1.75 million in 2020.
It's a lot of return, right? It's almost 4 times the initial price, but it's over 30 years. So if you buy a property, you have to keep it for a lot of time, 30 years plus, to make any kind of substantial return. Keep that in mind.
24. So it's pretty crazy that that home has appreciated over 400%. But what's even crazier is how much that same amount of money would have made in the stock market.
That same amount in an index fund tracking the overall market would now be $14 million. So that's a 4,000% return.
This is the thing that we often forget in the conversation of is real estate worth buying, is actually comparing it to what you would get in the stock markets. But obviously a lot of people wouldn't be buying in cash. You would likely just do a 20% down payment. So let's say $60,000.
Even just that $60,000, no additional amount added with the same return, would be about $2.7 million. And this is not even to mention that the house probably had maintenance costs over the years that the stock market portfolio would not charge you.
Keep in mind, she's only taking one property as an example, right? There are some properties that you can buy that would earn you a lower return and some would earn you a much higher return. It's only an example, right? Whereas in the stock market, it's also probably a median value, something somewhere in the middle, an average calculation. You can also lose money in the stock market, and you can also make tons and tons and tons of millions in the stock market as well. You just have know where to invest your money correctly, and it takes time and a lot of knowledge to get everything right if you do everything yourself, which I recommend.
Also closing costs when they bought and sold the home. There's generally a lot more fees when it comes to investing in real estate that we have to factor in when we compare it to the stock market. Every house and every housing market is a little different, but it's really interesting when you actually run the numbers. If you're not familiar with my channel, I have 2 properties that I own 50% with my sister. So we bought a townhouse in Seattle back in 2019 and a house in Palm Springs in 2020.
So now that I've had both of these houses for almost 5 years and money in the stock market for that same amount of time, I can finally compare and see which did better. The numbers can't lie, you know? Real estate is really glamorized. Home ownership is a sign of success.
It's a sign that you've made it here in America, even if all you've made is the down.
Yeah, not only in America. I think owning a home everywhere in the world is seen as a sign of social status, right? You are the comfort of your own home, you are your home which is secure over a long period of time, and that's something that everyone over in the world aspires to, not only in the United States, but everywhere in Europe, in Asia, in Africa, everywhere.
Payment. And our whole economy is kind of propped up on home ownership. When people take out loans, the banks make more money. That is how new money is generated, and our economy grows. So home ownership is really promoted in our society because it benefits not only the homeowner, but really the whole economy. The traditional American dream makes it sound like it is the best investment that you can make.
I'm not anti home ownership in general. I'm not one of those people who's like, yeah, let's rent everything, you own nothing and we eat bugs. No, I still totally want to own a home that I live in. More so what I'm talking about when I'm talking about real estate in this video is real estate as an investment.
Yeah. It's totally different to buy the home where you live in. It is definitely not an investment because you are not earning money on this home. The only money that you would earn would be the valuation of the home that you buy that would increase over time, which is actually very little. Nobody is paying rent for you in here. So the best investment you can make to earn money on a property would be buying something that you would rent afterward. And basically the tenant would pay the mortgage for you, right? But when she makes this comparison, it totally makes sense that she wants to own a home where she lives in. There are plenty of advantages to own the home where you live. There are also disadvantages, right?
Rental properties. Is it worth it to have a bunch of rental properties?
Let's take a look at how it shook out in my situation.
Okay, so we're starting with stocks because that is what we are comparing all the real estate to. So October of 2019, 5 years ago, the index fund that I invest pretty much all my money in was at 266. And today it is at 532, which is actually a 100% increase. So I doubled my money on that in 5 years. Typically it takes 10 years in the stock market. So that is unusual. But that is what happened. So that's what we're comparing the real estate to. If I put $100,000 into the stock market, it would be $200,000 today. Pretty simple. So that actually is kind of tough for real estate to beat because those are unusually high returns. And not to spoil anything, real estate also did quite well.
So let's look at the first property, which is the townhouse my sister and I own in Seattle. We bought it for $770,000 in 2019, and now it's valued around $915,000. So it's appreciated $143,000.
Which is actually quite good. She actually made some money in both cases. She didn't lose any money, which is actually great investment to make, actually. The worst investment that you can make, whether in stock or in real estate or everywhere, it's losing money. You don't want to lose money at all. It would be a very, very bad investment. So she won. She made some money in both cases, so she's actually a great investor. She's doing very well for herself. Well done.
For this house, we only put 10% down, so $70,000, my half of that being $35,000. We had $5,000 in closing costs, making my initial investment $40,000.
Then in those last 5 years, we've paid down $56,000 of equity. Some of that was from when my sister lived there and had roommates. And then in the last 2 years, we've actually had a tenant living there. The amount left on the loan is $644,000.
And remember, it's now estimated to be worth $915,000 if we sold today.
Making it so that if we sold today, we would have $271,000 before any fees. Of course, you do have to pay the real estate agent fees. It's usually about 5% of the sale price total. Monica is a real estate agent up there in Seattle, so that would save us on that. But there is a chance that we would still have to pay the buyer's agent, just depending on how the negotiation shakes out. Could be 2.5%, so that'd be $22,000. Making the final amount we would walk away from, $249,000. However, we did have some maintenance along the way. I would say we put at least $15,000 into it. New dishwasher, new washer, dryer, new fridge. So we are factoring in those expenses. So that brings us down to $234,000 in profit. Divided in half, of course, with my sister, my amount would be $117,000. And then the cool thing with real estate is if you live in the house 2 of the last 5 years, you wouldn't pay any tax on that, which is a unique benefit to real estate. So in this case, it actually did beat the stock market return, and real estate was the better investment if we're just looking at the numbers and being honest.
Okay.
Yeah, but the advantage is that she has diversified her investment, right? It wouldn't be a great investment if she put all of her money into the stock market or all of her money into real estate. You definitely want to have both. And then you can choose yourself whether you like stock more, you like real estate more. You can have more stock than real estate or otherwise, right? But you definitely want to invest in both. You don't want to have all your eggs in the same basket, right? That's how you make sure you don't lose money, that you have diversified your income. So if something does very bad, then you have still another place where you have put your money can do well.
But the Palm Springs house is kind of a different story. We purchased it for $750,000, had to put a little over 20% down. That was $240,000 total. My half was $120,000. And then I would estimate we each probably put another $120,000 into renovations. For this house, it's now valued at about $1,050,000, and the amount left on the loan is $464,000. We paid about $40,000 down of the principal payment. So if we sold before any fees, we'd have about $586,000 $186,000 divided by 2 people, $293,000. So the initial investment of $243,000 I made appreciated to about $293,000. That is before any fees of selling. That's a 22% total return after 4 years, about 4% a year. And when you compare this to the stock market actually did better. If you put $240,000 into an index fund, just tracking the overall market 4 years ago, it would now be at about $422,000.
Yeah, of course, the stock market can yield a higher return than any other investment if you know what you are doing in the stock market. But keep in mind, a lot of people also lose money in the stock market. So you want to not put your eggs in the same basket. So even if the stock market does very well, much more than real estate, you still want to have some real estate on the side. And I don't think she made any bad investment at all. She actually did very well. And real estate should appreciate over many, many years. You don't want to buy a house and sell it after 4 years because you won't earn any money like this. You definitely want to keep the property until you've paid everything and many, many years later. So probably 20, 30, 40, 50 years is the time frame that you have to look at when buying real estate, definitely.
So in this case, stocks did do better, and with the townhouse, real estate did better. And I think a lot of that is just because the real estate prices jumped up so much from before COVID to after. And when we bought the Palm Springs house, it was kind of midway through that jump. So we weren't buying at the very bottom. We were buying a little bit of the way up. But I think it is interesting to note that I would have made a lot more money with a lot less hassle had it just been in the stock market. The thing a lot of people like with real estate, that eventually the mortgage will be paid off. You have this asset that's worth quite a lot more than when you initially bought it, and you could rent it out and make income from that. But sometimes you would actually still just make more with your yearly stock market return after it's compounded for 30 years. With the Palm Springs house, for example, if it appreciated 4% annually, in 25 years it'd be worth about $2.8 million, and the rental income would probably be about $160,000 a year. Had that initial investment been in the stock market, it'd be $408,000 today, right? And 10% annually over the next 25 years, that would be $4.42 million. And just simply having that amount and
keep in mind, the best lesson that you can learn from here is first to diversify and two, to invest. You definitely want to invest the money that you have. Don't spend your money on things, on useless things that are perishables, right? You don't want to buy a big car if you can't afford a big car. You don't want to buy that many clothes, that many shoes, or anything else. You want to invest your money. Save as much as you can of your monthly income and invest that money into the stock market and into real estate. That's a great way to become richer and beat inflation and ensure that you will have money for the future saved up that you can use in case of emergency, etc.
an index fund getting a 10% return, that's $420,000 in a year. So not only would the portfolio value be more than the home value, but also the yearly investment income would be far more than the potential rental income.
So in the case of the Palm Springs house, even 25 years into the future, it seems like the stock market returns are better than the real estate returns. Obviously, these are just estimates. Things could end up a little bit differently, but I'm doing this based on historical data. You're probably wondering why I don't sell the house and put my money in the stock market. It's because I don't really view that house as an investment vehicle. I don't own it just for the investment purposes. Obviously, I use it a lot. It's not just some rental property that I don't care about. But if I was viewing it purely from an investment standpoint, I probably would sell it and just put my money in the stock market.
Yeah, you probably shouldn't do that. You definitely want to be diversified. You want to have some money into the stock market, some money into the real estate. And even if the stock market does well, you don't want to put all of your money in the stock market, right? And in the stock market, there are also many different ways to earn money and to lose money. If one company does well in the stock market, you don't want to put all your money into this one company, right? You want also to be diversified in the stock market. Some company are going to do well, some company are going to do not so well, right? So you definitely want to be diversified and don't chase the golden eggs. If you see something that is doing very well, you don't want to be 100% invested in. That's the fastest way to lose everything that you've invested. Don't do that. Definitely keep some money in the stock market, some money into real estate.
That's how the Palm Springs house math works out. The townhouse, though, is a different story. So with the townhouse, remember, we are going with that initial investment appreciated in the stock market. So that would have been about $80,000 today. In 25 years, at a 10% average return, that would be $866,000. And if you have that money in the stock market, you know, it would make $86,000 average per year. Compared to as a real estate investment in Seattle, if it appreciates at 4% a year, which is definitely likely because it is a fast growing city with limited land. In 25 years, it would be worth $2.4 million. And the rents would have increased so that it would be bringing in $134,000. Now the property taxes would increase as well to $25,000. However, after that $108,000, it is still better than what the investment income would be. But then there's also maintenance, probably, you know, $5,000 a year average, really more like $103,000. The interesting thing is when you look at how these are taxed, the rental income is taxed as ordinary income, so it's taxed higher than the investment income is taxed at long-term.
Yeah, that's a good thing to keep in mind. When you invest into real estate, you have many different costs associated with the real estate. So this is gonna trump basically what the money that you can make on the real estate in the end. On the stock market, you have much smaller fees. You basically don't have to pay for any renovation of any work to be done like you would have to on a house, on a rental property. So keep that in mind when you invest into real estate. The money that you can get is actually much lower because you have to maintain the rental property and pay taxes, etc.
Capital gains tax. The income from each of these investments, it almost evens out after taxes, but the obvious difference is the asset value. The house is valued a lot more than what that stock market portfolio would be. So real estate is the clear winner in the townhouse situation. And why is this, you might wonder? It really comes down to the leverage factor. Because we only put 10% down initially and we have a low interest rate, we're able to leverage all of the money we borrowed. So rather than having $80,000 appreciate at only 10% a year, we're essentially getting the returns of $915,000 at a 4% rate, which is a lot higher, $36,000 versus $8,000. That's kind of a simplified version of leverage, but that's really why I think the townhouse is the better investment. There's more leverage than in the Palm Springs.
Keep in mind, if you invest into real estate, like in the stock market, you're gonna make good investment and bad investment. The best thing that you can make is learn from your mistake and keep investing, right? You want to improve over time, you want to learn more about the stock market, learn more about investing your money, learn more about real estate, and make better and better investment over time. Everyone make mistakes in the beginning, everyone start out as a beginner without any knowledge, and don't let the mistake that you make in the beginning discourage you from investing your money into the right places. It's better to make the mistake when you're young, so start investing as soon as possible in your 20s, in your 30s, and then learn from your mistake so that you can have great investment by the time you're 60s, 70s, and etc.
House, because it's a short-term rental, we actually had to put more down on the property. We do have a low interest rate, but still it's like that money would probably be better off in the stock market.
I'm not actually planning to sell any of the real estate because both stocks and real estate fluctuate in value, and I just like having a diversified portfolio of a bit of both.
So my final thoughts, which is the better investment, real estate or stocks? Honestly, it just depends on the situation. I know I hate a nuanced answer too. I wish I could just say clear cut, stocks are always the better investment, but the truth is it's really different for each house and each housing market. But in general, doing this whole exercise did make me personally favor just investing in stocks because it is so passive. You don't have to deal with tenants, vacancies, maintenance, unexpected costs, and hassles. You can get a solid return that is pretty predictable. Of course, there are years that are going to do a lot better and some that are going to do a lot worse. But over the course of 30 years, it kind of on average evens out. I think when you factor in what a hassle rental properties can be, stocks are the clear obvious winner. In some cases, it can be a better return with a lot less work. Unless you have some amazing cash flow real estate deal that is really hard to find these days, by the way, then stocks I feel are just the better answer. Even these big real estate gurus on YouTube who have kind of been touting rental properties for years have now kind of come out and said that cash flow is sort of bullshit and it all just goes to maintenance. Specifically, I love what Ryan Pineda said on his podcast about this. Just watch.
it's made me realize that, to me anyways, I expect my rentals to not make me anything, period. Like, even if, like, I'm buying them to cash flow,
so real right now.
but I'm expecting they make zero. I'm not counting on anything because I'm expecting they're gonna have some drama that's gonna cost me something.
Yep.
And what I'm looking at them as a piggy bank tax advantage thing.
That's kind of the reality of it, even from someone who has a bunch of rental properties.
Yeah, that makes sense. That makes sense. There are some rental properties that are gonna cost you more than what you invested in initially, unfortunately, in innovation, etc. So keep that in mind. That is not always a good investment, but as always, you're probably gonna make mistakes, and you have to learn from your mistake and find the next best deal that you can find right out there. It's also not a good idea to ignore real estate completely and put everything into the stock market. That would be disastrous.
A bunch of experience in real estate.
Definitely, you want to be diversified.
He knows that most of that cash flow is gonna go into those annoying maintenance expenses.
And actually, the townhouse, we just signed a lease with a new tenant and it cash flows $200 a month now. But I don't even look at that as income. I'm like, that's for sure going to maintenance, and I'll probably still have to pay more on top of that. $200 of cash flow a month, in reality, that's all going to maintenance.
So the good news is you actually don't have to pick one or the other. You can invest in both stocks and real estate. But I wanted to make this video kind of as a point that just because you haven't invested in real estate yet doesn't mean that you're necessarily missing out on a ton, because if you are invested in some kind of asset like an index fund in the stock market, you're still doing pretty well, and in some cases even better than if you were in real estate. You know, doing this whole exercise of running the numbers really made me not want to buy rental properties and just have a property that I live in and that is my home, because there is psychological security to that. No one can take it from you, no one's gonna raise the rent, no one's gonna evict you. As long as you pay your property taxes, like, you're good, and eventually you won't have a payment at all. I like the thought of that. I totally get why people want to have a house that they live in. So that is my analysis of my real estate investment, you know, how it measures up to how the stock market did. Because a lot of people do ask me about this in real life. Let me know what you guys think of this analysis. Do you think it's accurate, or is there anything I didn't factor in? Comment down below, which investment do you prefer? Real estate or stocks? All right, I'll see you guys in the next video.
You definitely want to be in both. That was a good video. That was a great video from Shelby. Make sure you subscribe to Shelby as well. Like her video. Just right here. Make sure you... I hope you enjoyed this video today with me today, guys. And watch the next one right here. And I will see you there. Bye-bye.